Good afternoon. Welcome to GrainTV. It's December 4th, 2013. I'm Logan Burgess. To my right here is Brock Shimbino to help break down the action that we saw on a Wednesday in the grain market. Jumping into the quotes here, we can see March corn trading 5 1/4 cents higher. January beans led to the upside, up 9 3/4, and Chicago wheat moved lower today, down 6 1/2 cents. Brock, once again we had soybeans leading to the upside. What was your take on a trade here that was kind of mixed, both sides?
You know, if we take a look at the daily chart here for that January contract, you can see over the last couple of days we have gone down and tested that support level that we've been talking about around that 13.11 area. And I think a lot of what we saw today was technically driven. We saw funds jump in and buy about 5,000 contracts here over the course of the day. So I think that really got the buying going. Although we did start the day on the negative side, I think once we saw corn turn positive due to a sale to Mexico there in the export sale market, we saw beans follow along, and we ended up positive, being the leader to the upside, up over 9 cents.
Yeah, you know, I think corn wasn't quite as dramatic as what beans was today, but I think it was almost the talk of the trade. As you said, Brock, we had a good export sale to Mexico reported this morning, kind of getting things started there, and we had great weekly ethanol production numbers. If we take a look here at the model we've been following here throughout the marketing year, red bars are weekly production figures. The black line is what we saw last year in terms of weekly production. And you can see that so far to start off the marketing year, ethanol production has remained extremely strong. Really driving this strong ethanol production has been an ethanol crush margin at ethanol facilities, which has really picked up some ground in the last couple of days, now approaching $4 per bushel in Iowa. One thing that's really been driving that has been ethanol futures. If we look at the January ethanol futures contract, that's up about 20% during the month of November. So the price of ethanol is really giving these ethanol plants a lot of incentive to grind corn right now, and we've been talking about it for a while. Basis opportunities still remain at these ethanol facilities. They continue to be very aggressive bidders of corn in the spot market.
You know, we've had a few days of rally in the corn futures market, and if I was a producer, and we've had a lot of questions coming into the office here recently, what they should be doing to take advantage of this this rally we've seen over the last couple of days. If you're a producer, Logan, what are you doing to take advantage of these prices out there?
You know, I think that where we closed at today is not a bad price to lock in some March grain, but I think that this market still does have a little bit of upside. If we look at the chart right now of this March 14 corn future contract, you can see we're on pretty good technical footing now that the 420 price level has held. We've had 2 days of strong gains. I wouldn't be surprised if this market could go up and test those recent highs that we have sitting around 445. That's also the 50-day moving average. But it's a good thing to keep in mind that right now, in my opinion, this is another rally within a broader bear market. There still is downside, so I would take advantage of pricing some grain here over the next 2 or 3 days. These are some good prices compared to what we've seen, and it seems like the fundamentals are relatively strong to keep pushing it higher, but downside does remain in this market. Bottom line, 445 should act as some resistance to the top side.
You know, like you said, we do have some pretty good fundamentals for a corn market. We've seen very good ethanol production like we highlighted here earlier. We've seen export sales be very strong lately. But one thing that could weigh on the market is what happened, some news that came out of China here recently in the export market there. We did see that they rejected a cargo that contained a GMO strain that is not registered for them to take as an import. So we have to continue to monitor that story. That could really weigh on the corn market here moving forward. Could move us down just a little bit lower in that market.
Yeah, tomorrow we will be getting the export sales, and you know, export sales of corn, soybeans, and wheat have really been pretty strong here in recent weeks. What's the trade looking for out of tomorrow's report?
You know, we're looking for another strong showing for both corn and soybeans. Wheat, we're looking for that to continue its slide a little bit lower in the export sale market. You know, what we're looking at from the analysts here is wheat, we're looking at 450 to 500,000 metric tons, corn 850 to 950,000 metric tons, and soybeans 900 to 1.2 million metric tons. So another good showing expected for both corn and soybeans, and of course we'll tweet those numbers when they come across the news wires.
Certainly. You can find us over on Twitter at GrainTV is our account there if you want live updates as the markets trade. If you want to take a free demo of the mobile trading app we now have here at GrainHedge for iPhone, iPad, Android, and tablet, visit us at grainhedge.com. That kind of wraps up what we saw here, though, for a Wednesday in the grain market. Keep an eye on those export sales report out tomorrow morning for more market direction, but certainly corn looks to be on good footing, and soybeans had a good rebound. We'll see if it can continue into tomorrow's session. Thanks for joining us. We'll see you then.